the limitations of the MTBPS. The MTBPS is a mid-year statement. It takes stock of what has happened so far in this financial year. It makes corrections, for example, on growth estimates or on expenditure, and then it forecasts how we intend to develop a fiscal framework for the coming year. There are some details here, but I think yesterday's cabinet statement made it very clear that there are many details to follow, and that over the next couple of months those details will emerge. But the foundation stones of some elements are in what we said today. We said that growth has improved from 2.3 to 3, and that we recognize that we've got to go well over 6% if we want to create the jobs that we have to create. Secondly, that we have good conditions for monetary loosening in South Africa, and hopefully the governor might decide to, with the MPC, give us slightly lower interest rates, which will make capital cheaper and encourage investment in South Africa. Thirdly, we've stated our fiscal stance, and the fiscal stance is one which says we're only going to have 2.7 real growth in our expenditure, and we have a fairly credible and balanced approach to our fiscal consolidation, which doesn't compromise growth prospects but ensures that a narrowing of the deficit occurs at the same time. Now, all of these, plus the efforts that we are beginning to make on the exchange rate, are all important predisposing factors, if you like, to the growth path itself. The second thing that we are indicating is how we will prioritize our expenditure, and that the social priorities like education and health, and the new industrial and other priorities that emerge from the growth path and the infrastructure are going to be the focal areas of the way we prioritize. And then lastly, it's in the next couple of weeks that we now begin to work on the actual allocations of money and how we will prioritize the financial allocations. What will follow thereafter is the more detailed plans. What are we actually going to do in agriculture to improve job creation in agro-processing in agriculture? What are we going to do in the mining sector? So each of the ministers and their respective departments will present those more detailed plans.
Of course, you have taken a counter-cyclical approach over the past couple of years, which is why we are where we are today. We've come through quite well. Will you continue to follow this counter-cyclical approach as we do follow this new growth path for the country?
Yeah, well, that's our policy stance, and it's stood out on good ground up to now, and given us the fiscal space that we've required to do what we did during the recession, and hopefully the conditions that lie ahead will allow us to continue along that road.
You talk about the rand being a critical challenge to the growth strategy. Of course, you've also pointed out some of the positive benefits of having a strong rand. How do you manage the expectations on the rand and get it to a more competitive level while still sticking to the mandate that was taken up by the G20 last weekend, and that's for no competitive devaluations of the currency?
And that's why the approach that we are taking is that we've got to look at all of these in a balancing way. There are certainly advantages, as you've pointed out. So those sectors of our economy that are going to import huge turbines or capital goods should do it quickly and take advantage of the strong rand. We have the benefit of a low inflation, and therefore hopefully lower interest rates as well, and take advantage of that while it lasts. On the other hand, as you correctly point out, there's the global and national dynamic. We believe that we've done nothing that's outside of what we've agreed to on the global front in the G20. And once the G20 begins to emerge with a more credible short-termish and medium-termish answer in terms of how do we tackle some of the structural problems that beset us globally, and we understand how to constrain the negative impact of quantitative easing that some of the leading economies that want to undertake, we'll get a better measure of what we need to do. In the meantime, we need to, as much as possible, counter the appreciation of the rand and attempt to stabilize it in some way.
One of the measures you did announce today was exchange controls, further relaxation of exchange controls. But perhaps from those relaxations, you could be drawing more long-term investment to the country because you are creating an easier environment for companies to come and invest for the long term. And that could have the opposite effect on the rand, couldn't it?
Well, that's part of the balancing act, that if money can go out of the country on the one hand, and if companies can bring in their money and invest elsewhere in Africa without too many administrative hurdles. On the one hand, we are improving employment and reputational benefits that South Africa can get. On the other hand, money begins to flow out and help us to stabilize the rand in a different kind of way and counter the effects of the capital flows as well.
Of course, we have had a number of companies interested in moving into South Africa, and Walmart's one of those, interested in buying Massmart as a springboard into Africa. HSBC chose not to pursue a stake in Nedbank, however. Just given that the country is trying to attract more FDI, is the door still open for companies who want to come and talk to you, perhaps about buying a South African bank?
Well, I don't want to be specific to a South African bank. I mean, we're open to foreign investment in South Africa. We're open to constructive partnerships. We're open to companies like Walmart who have the intention of investing in our people, not firing people, complying with our labor laws, encouraging black empowerment in some ways, and bringing in new technology and expertise to that particular sector. We are a bit disappointed with the way HSBC has operated. We don't think that the pull-out of the Nedbank arrangement was done in an elegant way, and we believe that they owe South Africa an explanation.
Minister, you did mention looser monetary policy. Of course, in February you did change the Reserve Bank's mandate to also look at growth and jobs. Is this being loosened further? Would you like the Reserve Bank to focus more on growth and jobs going forward?
Well, I think their mandate is clear, that they've got to look at inflation on the one hand and growth and jobs on the other hand. But ultimately the Reserve Bank is independent. They have to exercise their judgment in terms of what kind of risks and positive factors obtain at any particular point in time, and make their call on interest rates. So we won't interfere with that. We'll say broadly where the policy direction should be, but it's the factors that obtain at a particular point in time, like inflation and other things, which will determine what they actually do.
Health spending is set to overtake education over the course of the next few years in terms of budget allocations. When can we expect more news on the national health insurance and how this is going to be implemented, and also the cost to the taxpayer in South Africa?
Well, we're working through the details at the moment, and what we have is a ministerial advisory committee that's done, if you like, a set of scenarios on what is possible over the next 14 years. We now have an interministerial committee that will take responsibility for working out the details. We need to combine that which has been done by this committee with what current government work is going on in terms of improving primary health care, improving drug purchases and distribution, improving health and nursing care, and so on, and turn that into a coherent and pragmatic program of implementation. I think in the next 3 months or so, we'll get a better idea of where we're going over the next few years.
And also